Good afternoon. You've tuned into ET Now. This is Market Fatafat with me, Karunya Rao. It's the most comprehensive market wrap which promises to spot the hottest movers in the stock market. And over the next half hour, we'll take you through the top buzzers and spot where the big trends are emerging. Joining me on the show today is Rajesh Palvia. He's the head technical and derivative research at Axis Securities. Of course, from the research desk, as always, I have Soumya with me along with Varun, who will be part of the show today. Hi guys, welcome on board. Let's start Market Fatafat with stock number one. That's MGL. Yesterday we saw the stock gain about 8%, actually over 8% after Credit Suisse initiated coverage with outperform. The target that they've given is very, very ambitious as well, 12,080 rupees a piece. They expect a volume CAGR of about 5 to 6%, and they expect MGL to benefit from margin expansion when APM gas prices are expected to decline by 26% from April 1st, 2020 onwards. In fact, the stock is at a 52-week high, and do remember it's the third straight session that the stock has been on an uptick. Moving on then to a name from the benchmark index, we're talking about Tata Steel. Rajesh, how are the fundamentals of this one looking?
Yeah, good afternoon. If you look at the overall metal pack, all the stocks are shown, good buying interest in last couple of days, and especially on the Tata Steel stock is, consolidating since last 3-4 trading session and witnessing, supply pressure at around 505 level. But looking at the overall setup, and stock is trading above its important moving average, and near term as well as the short term setup is looking very positive. So I feel that, any dip is a buying opportunity in the Tata Steel. So my advice would be to buy in the dips near to 490 level and keep stop loss of 480, and I am expecting that again stock can regain towards 520 level. This could be the target in the near term for Tata Steel.
Right, 495 rupees meantime is where it's perched at. Let's keep it with the large caps then, shall we? Varun, Maruti is a stock that we're tracking in trade. The management also joined us on the channel earlier on the day. Can you give us the highlights from that interaction?
Right, Karunya. So it's actually some positive information for Maruti. The transition that's happening from B4 to B6 is going to leave a lot of auto players with a lot of inventory laying around of BS4, because obviously customers don't want to buy those cars as they'll soon be outdated. Now, in the case of Maruti, our inventories were also significantly large. Reports indicate that 80% of that BS4 inventory has already been cleared. So that's really positive for them, because at least whatever money went into producing those cars, a fair bit of it has been recovered. But going forward, obviously the industry dynamics haven't really changed recently. Auto is going through a prolonged slowdown, and Maruti will be affected by that. But just positive for them that the majority of their BS4 inventory was cleared.
And that is definitely a sort of indication for some green shoots coming in, at least for Maruti, while the overall sector continues to be negative overall. We also spoke to Shashank Srivastava. Like I said, he's the ED at Maruti Suzuki, and he talks about the growth outlook. Let's listen in.
So if you look at the last 20 years or so, and you break it down into 5-year periods, then the average CAGR for the last 5 years is actually lowest. It was a little bit higher in the previous 5 years and even higher in the previous 10 years. Of course, it's not very unusual, because we are a developing economy, we are a growing economy, and we started with a lower base, which obviously affects the CAGR when you take the 5-year period for the last 20 years. So, but that is a trend in the sense that while the volumes have increased, we have seen a lessening of the growth over this period, over the last 20 years. Now, the second thing is that, of course, we have now become one of the largest passenger vehicle market in the world. We're actually currently 5th in the world. So that's obviously in the last 20 years we have grown tremendously, as has China, for example. But if you look at the other trends, then I would say the average age of buyers have actually come down. So it used to be around 40-41 years, let's say about 17-20 years back, but it's now close to 34. If you look at the women buyers, they have increased significantly. So It used to be about 2-3%, 4% earlier, but it's now in some models close to 16% as well. If you see the body types, then earlier hatches were very large. They were like almost 70%, but today hatches comprise about 45% of the market. If you look at SUVs, which was just about 4% about 15 years back, they are now close to 35%. I mean, MPV and MUV, the MUV segment is close to 35%. So these are the broad trends. Of course, vehicles are pricier because of regulations as well as other reasons of cost. They are more feature rich, and if you however see this one trend which hasn't changed, and I think it's something to do with the demographic of our country, it is the first time buyers are more or less around 48 to 50% in the industry. So we see an increase in the replacement buying, but the first time buyers also is relatively around 50%, sometimes 47, sometimes 51, 52 and so on.
Okay, that's Maruti's management talking exclusively to ET Now and talking about how they are expecting the auto industry to go through interesting developments once BS6 is rolled out. They will get to see how the pricing points are going to be also turning out for a whole host of players. Maruti says 80% of their petrol vehicles have already been upgraded to BS6 engine, and that's something that they have updated us about over and above the fact that BS4 inventory is completely now been cleared. All right, moving on then to our next stock, which is Wockhardt, soaring away in trade really. The pharma company essentially has received approval from DCGI, which is Drugs Controller General of India, for its two new antibiotics. One is called Emroc-4 and the other one is called Emroc-O, which stands for oral. This is something that they managed to inform the exchanges as well. These are essentially treatments for diabetic foot infections, concurrent bacteremia as well. So these look like they're quite critical for the company, on back of which the stock is also suddenly flying away. It's trading high by 6.5% as we speak, and that's the update keeping Wockhardt in the limelight. Moving on then, back to some large cap names. Rajesh, Bajaj Finance, how are the technicals?
So of late we have seen corrective action in Bajaj Finance, and stock managed to take support at around its multiple support area of 3900, and we have seen very smart recovery in the stock in last 2 weeks. And looking at the recovery which we have seen in last week, I feel that this momentum is likely to continue further on the higher side, and overall setup is positive for the Bajaj Finance. So for short to medium term investor also, one can use any corrective action as a buying opportunity. Even at the current level also, one can buy Bajaj Finance for upside target of 4350 to 4400 in the near term. One can place a stop loss of 4100 if they are buying at the current level.
All right, Bajaj Finance, in the meantime, trading at 4217 levels right now. Okay, next stock on our radar is JSPL. The stock has been in focus since a couple of days now. Varun, what's the latest there?
Right, Karanya. A lot of news flow as far as JSPL is concerned. Obviously, the big Sarda Mines trigger on the counter. Well, JSPL, Citi's come out with a note on it actually, and they have a target price of 188 rupees per share, which implies still around another 5% upside from here. And they see that access to the Sarda Mine will be a huge positive for the counter, and the cash flows of JSPL have in any case seen some significant improvement over the last 12 months. So that will only aid their performance going forward. And the valuation currently, which is just 0.7 times price to book value, seems quite appealing to most investors and to Citi especially. So those are the reasons they're flagging off JSPL today.
Right, the stock in the meantime is perched at 179.5 rupees a piece. Let's talk about the next stock on our radar. It's Apollo Hospitals that we're tracking. Rajesh, how do you see the chart for this one? Right now it's up 4.5%. It's seen a decent uptick in the recent past. Is it likely to continue?
Yeah, if you look at the overall setup, stock is looking very positive on the weekly charts, and if you look at the pattern, stock managed to give down sloping channel breakout on the weekly chart, which is suggesting that the stock can show further more strength from the current level also, and we are expecting that target of 1640 in the near term for Apollo Hospital. So one can continue to hold the stock even if you are buying at the current level also. One should adopt a stop loss of 1560 if you are buying at the current level, and one can hold the stock for 1640 in the near term basis.
Right, that's Apollo Hospitals trading high by $70 right now. Okay, let's do one thing. Let's slip into a short break right now. We'll come back with a big exclusive story and more stocks to watch out for. Welcome back. You're still watching Market Fatafat on ET Now, and as promised, here's a big ET Now exclusive. We were the first ones on 20th September 2019 to tell you that Finance Minister Nirmala Sitharaman and the PMO since September have been discussing the scrapping of LTCG, which is long-term capital gains on equities, besides it. Now we understand that meetings have also been held to also review the dividend distribution tax. Nayantara has exclusive updates on that story. Let's bring her on board. Nayantara.
Seriously, a capital markets booster package that was on September 20th, 2019, tweak the long-term capital gains tax, maybe redefine it, go beyond 2 years and maintain parity between listed and unlisted shares. After that story, the Prime Minister also, in a way, kind of confirmed it while talking in America and saying that how the laws are going to change and the capital market participants would have the same kind of treatment in India as they have elsewhere. Well, ladies and gentlemen, we understand that it's not just the long-term capital gains tax that is being discussed at the highest level, that is between the Prime Minister, Prime Minister's office and the Finance Minister. It is also the dividend distribution tax. Review meetings have been taking place on the DDT. The pros and cons have been discussed on it. The big question, of course, is that will DDT be scrapped in budget 2020? As far as the pros go for scrapping the DDT, it is being seen as a regressive tax measure. It is being seen as an unfair levy being charged along with the securities transaction tax. And the third case being, and the most important one, that can act as a massive investment booster shot without being too expensive for the central exchequer. So this is the exclusive story that we're picking up on ET Now. As far as keeping the DDT goes, the only one that seems to be discussed, or what my sources in the government tell me, are that should the government be looking at foregoing revenue.
Right. Thanks much for joining us, Nayantara, with that big exclusive story. The FinMin is looking at redefining not just LTCG, but dividend distribution tax could also be very much under review. Okay, in an exclusive chat with Nikunj Dalmia, Rakesh Jhunjhunwala says budget may dole out relief for the realty space. He also adds that the government must assure that business community is on their side.
I personally feel government should, make it long-term capital gains tax-free by enhancing the period. From 1 year, you make it 2 years. So up to 2 years becomes all short-term capital gain. I think it will lead to net gain to government revenue, and it will lead to a big gain in sentiment. Enhance the period of long-term capital gain, but make it tax-free. Then I think we should give a lot of relief to the real estate sector. We can make a view that anybody who buys a house in the next 12 months, whenever he sells it, there is no capital gains. First of all, people generally don't buy houses to sell them, right? And second thing is there is no immediate loss of revenue. If you say that whenever a house is, you buy a house, if you sell it after 2 years minimum period, there will be no capital gains. And I think there should be other relief for the real estate sector, right? I think we should enhance the amount of, and I think there should be big relief for tax payments for income from 10 lakhs to 25 lakhs.
So it's high time that the government now takes notice of the demand side of the economy. That needs to be fixed urgently, according to you.
See, nothing can be fixed by one action. It's a process. So a lot of government action is needed in order that, the economy comes back to its growth potential. Second thing, also we have to communicate by the budget to the business community that we are on your side.
Okay, let's step back on to Market Fatafat then. Pankaj is standing by with some more stocks to watch out for. Pankaj, Sterlite Technologies, very weak reaction to the numbers.
So not that great set of numbers. When you look at the numbers, it has led to EPS downgrades of around 6-7%. Access Capital, for one, has reduced their EBITDA estimates by 11%, and that's the reason why you're seeing this 5% sort of a downtick as far as Sterlite Tech is concerned. It was already an underperformer, continues to be the same, around 124 after the numbers. We spoke to the management earlier, and they were sounding in quite bullish.
Okay, that's Sterlite Technologies bleeding in trade, down 5% as we speak. Rajesh, let's talk about a gainer now. Prestige Estates is hovering around that 52-week high. Is the upward momentum going to continue?
Yep. The stock managed to give breakout of previous swing high of 355, and now it's trading above all-time high level. And looking at the volume action which we have seen in last couple of days, the traction which we have seen on the delivery side also, we feel that stock will further gain from the current level also. 390-95 level can be seen in the near term basis. So one can buy at the current level of also with the stop loss of 368.
All right. Meanwhile, a tin plate is also buzzing away in trade. Varun, how are the numbers?
I'm sorry, could you repeat that? I didn't catch that. I lost you for a second.
Tin plate numbers.
Tin plate, okay. So the revenues were actually down 15% for tin plate, 533 crores versus 630 crores. And then your PAT was actually up 200% at 45 crores versus 15 crores. So I'm assuming there's definitely some tax element in there, which would have benefited the company this quarter. So quite a decent set, I guess, on the face of it.
Okay, that's tin plate for you, looking very, very upbeat. Higher by 3% is where it's perched at right now. Moving on to another gainer, that's Avanti Feeds. In fact, the stock has been, rising very steadily, and it's not just today, but over the last many, many days now, is that Avanti Feeds has been buzzing in trade. In fact, this week itself, it's the third consecutive session of rally. The stock is trading at a record high, and that's exactly why we're flagging it off on the show right now. Pankaj, coming to you for a pharma company, it's Sun Pharma. Can you tell us what the CLSA note says?
So, CLSA seems to be quite upbeat as far as Sun Pharma is concerned. They are expecting a greater than 20% growth, and this will be led by the specialty products that the company has. Now, the key call is not only the growth number that they are looking at, but also the valuations at which the counter is trading at. But just let me clarify, they have been bullish on Sun Pharma for a while. They continue to do so. The stock has been an underperformer, and they still believe that specialty portfolio, which may trigger the net in 20 or 21 in terms of high growth, is something which can act as the next catalyst.
Okay, Sun Pharma, meantime, is trading with a gain of close to 0.5%. Rajesh, I'll come to you for Bandhan Bank now. The last 2-3 months have been quite difficult for Bandhan Bank. The stock from 625 levels has come crashing down to now 470, 475 levels. Do you see the weakness continue?
Yeah, absolutely. If you look at the last 2-3 month pattern, stock multiple times, fizzle out the rally, fizzle out around 525, 530 zone. And now looking at the chart pattern, it's continuously forming lower top, lower bottom formation on the daily chart. And stock is trading below all its important moving average, which is, adding up the bearishness on the stock. So my belief is that if stock continues to trade below 490 level, then we may see further more pressure in the stock, and lower side we can see a level of 460, even 455 on the lower side. So my view is bearish on the Bandhan Bank, and one can remain on the short side, though stock is not available on the derivative. So my advice would be to wait to buy the stock around 455, which is the next important support area on the lower side.
Okay, so the stock can perhaps slide towards 460 to 455 levels. Those are something that you need to watch out for. Pankaj, New India Assurance, been a good week for the company, for the stock price of the company. What's the update?
So, as you pointed out, that it's been a buzzing name. Delivery volumes have been high. New India Assurance was in focus yesterday as well, and then today again you're seeing. However, volumes is lower, price action is lower, but overall in this week, general insurance companies have done well. ICICI Lombard declares numbers tomorrow. That's also a stock which is buzzing ahead of his numbers. So all the general insurance companies seem to be doing well.
Okay, that's New India Assurance for you, trading at 166 rupees a piece. Varun, what's the update on Titan? Why are we flagging it off?
So Macquarie's put a note out on Titan, obviously post the recent numbers and everything, and they maintain their neutral stance with a target price of 11.59 per share. So what they say is that the street is currently building in around an 18% growth rate, which is actually higher than what they reported in Q2 by a fair bit. And the fundamentals of this business remain strong. So intrinsically, in their opinion, the stock is really well placed to outperform. And the only thing to look out for really is that the higher gold prices can have an impact on the near-term profitability. But barring that, everything still looks good on the long term, according to Macquarie.
Okay, that's Titan for you, trading at 1180 rupees a piece. GMDC is another stock I would like to outline. In fact, the entire mining stocks have been doing fairly well in the last couple of days, in the last one odd week, and GMDC is one of the biggest gainers among its peers. Right now also it's perched higher by about 5%. Really, it's at its highest level since September 2019. So just wanted to mark that up move coming in on this counter as well. With that, we're completely out of time on Market Fatafat, so we're going to have to wrap it up. Thank you so much, Rajesh, Varun, as well as Pankaj for joining in.